What's up, family? This is your boy Ivan Hall, the Credit King. Do you know how to get pre-qualified for a loan with bad credit? Pre-qualification is a simple but crucial step in the loan application process for those with terrible credit. When you have low credit, getting a loan can be especially unpleasant since you probably need the money yet are more likely to be declined. Fortunately, pre-qualification can assist you in determining your likelihood of receiving the loan you require. Even though getting a loan with bad credit may not always be a good decision, there are situations when it is necessary. You could be looking for a loan to cover unanticipated or urgent costs or to make payments on an older, high-interest debt. Unfortunately, the credit bureaus are unable to distinguish between someone with terrible credit who is only struggling and someone with low credit who simply has bad habits. You are far more likely to be rejected since they will probably evaluate the credit reports in the same manner. As a result, your bad credit ratings will taint whatever loan you can obtain. You are most likely limited to loans with exorbitant interest rates or other bad terms, which will make it much more difficult for you to repay your obligations. Although pre-qualification won't necessarily resolve these problems, it will assist you to determine if you will be accepted before you submit your application. Pre-qualification enables you to learn the sorts of loans you could obtain, how much you could probably borrow, what your interest rate might be, how much you might pay each month. Pre-qualification is significant since it does not appear on your credit record, so you might assess this information without negatively affecting your credit score. Before extending you a loan, the majority of lenders will want to review your credit reports. Your chances of securing the loan would be impacted if you have poor credit. But having terrible credit doesn't always imply you won't get a loan or that you won't be eligible for any loan. It often denotes that your interest rate will be greater. This implies that when you repay the loan, you will end up paying more than normal. However, there are some circumstances where paying a higher interest rate is worthwhile in order to address your current larger problems. It will nevertheless often have a lower interest rate than other emergency solutions like payday loans or cash advances. Having said that, anyone seeking a loan with poor credit should still compare shops to get the best offers. Lenders often check your credit reports when you apply for a loan. A rigorous inquiry like this will be recorded on your credit report. A single hard inquiry might not hurt your credit score significantly, but a string of them might hurt your already low credit score. Pre-qualification, on the other hand, is only a rough assessment of your credit standing and loan eligibility. Since no hard investigation is necessary, it won't lower your credit score. Pre-qualifying also allows you to view potential terms, payments, and interest rates without really making a commitment. And last, compared to the application procedure, pre-qualification is substantially shorter. Time is a crucial consideration if you really need a loan. The pre-qualification procedure is straightforward, albeit the lender may need additional processes. 3 stages are included in a typical example. Fill out a pre-qualification request form with details about your name, income, financial situation, and desired loan amount. The lender examines the request and does a mild credit investigation. This won't lower your credit scores like a hard inquiry would, more like a sneak peek at your credit record. When you pre-qualify, the lender informs you of the kind of loan you could be eligible for. This could cover information like the interest rate, the payment schedule, and other conditions. However, all of this is only an estimate, so it could vary once you really submit the loan application. Pre-qualifications happen quickly as well. A few online pre-qualifications might take only a few seconds. The next step would be to formally apply for the loan with the lender if you pre-qualify and like the conditions. This entails providing them with further details and running a hard inquiry on your credit record. Keep in mind that you might still be rejected even if you pre-qualify. In this situation, the lender would ordinarily issue you an adverse action notice outlining the reasons why your application was rejected. As with any loan, it's crucial to start repairing your credit as soon as possible. This comprises timely bill payment, not taking on new credit, reducing debt as soon as feasible. Your probability of getting a loan authorized or even becoming pre-qualified for one is significantly influenced by your payment history and debt management techniques. Any action you can do to raise your credit score is a good thing. Even if you have bad credit, there is still time to improve things if you act now. Pre-qualification could make it easier for you to shop around for the best offer and avoid several hard inquiries, but it is always advisable to establish excellent credit practices and strive toward a more secure financial future. For more credit tips, credit hacks, and credit repair secrets, subscribe to our YouTube channel or visit us online at thecreditking.com.